Today, we're going to talk about how Y Combinator trends can be a powerful tool for investors who want to spot the next big startup. So if you're an investor and you want to put your eggs in the right basket, this video is all you need. Have you ever wondered how investors identify high potential startups? What exactly do they know that makes their investment the right one? Well, Y Combinator trends might just be the answer. YC has built a reputation for shaping the startup world, launching some of the biggest names we know today like Airbnb, Dropbox, and Stripe. Following the patterns and trends coming out of YC can give you an early look at new markets with high growth potentials, helping you spot the next unicorn. In this video, I'll guide you through recognizing Y Combinator's trends and using them as a strategy to find startups that are likely to grow fast. All I can say is that by the end, you'll have a clearer sense on how to align your portfolio with these emerging trends and stay ahead in the startup investing world. Let's get started. So, why pay attention to Y Combinator trends? Well, we already know that YC has earned its place as one of the most influential startup accelerators in the world. That is to say, every year, YC invests in hundreds of startups across different industries, and these new batches tend to highlight emerging tech and market trends that could shape the future. Now, YC often sets the pace of the startup world, and what's in demand at YC today could become the next big thing tomorrow. We know it happens over and over again with startups like Heroku, Webflow, Instacart, and DoorDash. Some of the most famous YC graduates have even gone far enough to become industry leaders, taking markets by storm and creating new categories. Think of Airbnb in the travel space, or Dropbox in the cloud storage, or of course, Stripe in payments. Each of these companies entered YC as ambitious young startups and came out as category-defining businesses, proving that YC is a valuable starting point for spotting high-potential startups. And now to the main question, what trends is YC focusing on now? Well, today, Y Combinator is increasingly investing in fields like AI, SaaS, FinTech, and health tech. The first trend is artificial intelligence, or AI. Now, I know I had my doubts about AI when the bubble first started, but I have to be realistic. As an investor, if I see a really good opportunity, I must go for it. My past doubts are on one side, but the fact is YC has been backing AI startups that apply cutting-edge technology to solve real-world problems, and that is startups that I want to back. Startups in AI aren't just creating niche tools, they're building platforms that can change how industries operate. From automating customer service with chatbots to using AI for medical diagnosis, YC's AI investments are aimed at massive transformation. Cruise, the self-driving car company, went through YC as early as 2014, so they've been at the forefront of AI innovation for a while. FinTech is booming at YC, if I were to say so for myself. There are many startups focused on everything from decentralized finance to personal finances tool. FinTech has consistently been a growth sector for YC, as financial tools are necessary for nearly every business. YC's FinTech startups tend to address big pain points in the finance sector, providing investors with opportunities in innovative financial services. And this is another area you can explore if you want to make the right investment. We can of course think of Coinbase in the crypto world, but I've personally invested in two seed startups from YC that both became unicorns, both in the financial sector, Jeeves and Baobab. YC has also produced countless SaaS startups that now dominate their industries. From team collaboration tools to niche enterprise software, SaaS is attractive because of its scalable and repeatable business model. SaaS companies can start small and grow quickly without needing heavy infrastructure, making them highly profitable when successful. Here we can just mention countless examples. I'll just mention Algolia, Weave, Segment. And just over the past few years, YC has also funded numerous health tech and healthcare startups that work on solutions from mental health to apps for diagnostics. The focus on health technology aligns with the growing demand for better healthcare solutions, especially in the digital format. I want to mention here startups from YC like Lucira Health or Notable Labs. Understanding these trends not only helps you align with future markets, but also shows where major innovations are taking place. That being said, Spotting these trends early will give you a chance to back companies that could shape the future, just as Airbnb, Dropbox, and Stripe did in their own markets. Now that we know where YC is focused, let's talk about how to evaluate these startups effectively. YC has a rigorous selection process and often uses specific criteria to identify companies with high potential. That means you can apply similar filters to identify startups worth supporting. First, is the team backing the product worth your money? Y Combinator heavily emphasizes team strength. In fact, it is part of their application process that the founders introduce themselves and convince YC why they are the best pick. They look for teams that bring complementary skills and a deep commitment to their startup's mission. For you as an investor, it is a critical factor. Let me put it this way. A great idea can fail without a dedicated team. Your ideal founding team needs a blend of technical and business skills and be capable of solving big problems together. When evaluating YC startups, look for teams that show resilience and clear communications. 2, is the product something that's in demand and will stay a long time? Another top criterion is whether the product clearly meets a specific demand in the market or not. YC often selects startups that have a sharp focus on solving real problems with unique solutions. Think of Coinbase helping individuals buy Bitcoin really easily. As an investor, you should look for companies that know exactly who their target market is and have early indication that people want their product. You can often find this information through product usage data, customer testimonials, or even a wait list for new customers. 3, what's the growth potential for that startup? All right, let me say this as simply as I can. YC looks for startups that can grow fast, and so should you. High growth potential means a startup can expand its customer base quickly and efficiently. Growth potential is often an indicator of both the size of the market and the scalability of the business model. That means you need to look for startups with large, addressable markets and a plan for scaling up without needing massive increases in resources. You wouldn't want to invest in a startup that's always running low on funds or doesn't have a clear direction of where it's headed. 4, innovative solutions to big problems. Once more, YC is drawn to startups tackling large problems in a new way. Innovation is a key player here. It's not just about solving a problem, but solving it better than anyone else. This means you need to evaluate a startup based on how innovative their approach is compared to existing solutions. Ask yourself this: does this company bring something unique to the market? Are they addressing a significant pain point in an innovative way? Or is there someone out there who's already doing a better job? 5, traction and early customer adoption. Finally, traction is a key indicator that a startup is worth paying attention to. If a YC startup already has customers, revenue, or active users, it's a sign that people value what they're building. Traction is like a proof of concept. It shows that the market is responding positively. When assessing a YC startup, look at early customer numbers, feedback, and repeat usage. This can tell you a lot about the company's future potential. Basically, using these criteria, you can evaluate a YC startup with the same critical lens YC uses. And by focusing on strong teams, clear product market fit, growth potential, innovation, and traction, you're more likely to identify startups that are going to make it big. Now, let's talk about using Y Combinator's events to identify the next big startup early. This is something that I personally do, attending in-person YC events and demo days that I'm lucky to be invited to. First, attend demo days. Y Combinator holds demo days at the end of each batch where startups pitch their ideas to investors. If you're lucky enough to be invited, attend them. These events are great opportunities for you to get a first look at those emerging startups and spot potential winners. Demo days used to be live on Zoom, but now they're back in person in San Francisco. So if you want to attend, you have to be here. Look for startups that clearly communicate their value proposition, have a solid team, and show traction. 2, follow industry disruptions. YC startups frequently aim to disrupt traditional industries, and understanding the disruptions can guide your investments. In recent years, for example, YC has backed companies in sectors like AI, education, and e-commerce. Keeping track of YC's portfolio allows you to see which industries are ripe for change and identify early movers. If you notice a pattern of startups focused on a particular industry, it may be a signal that this area is about to take off. 3. Identify red flags. All right, this is the bitter pill. While YC startups are high quality, it's still important to spot red flags. A few things to watch out for include the lack of clarity on the business model, overly optimistic growth projections, or founders who seem disconnected from their target audience's real needs. The truth is, even YC-backed startups can have flaws and can fail. So it's important that you approach every opportunity with a critical eye. But knowing how to use these insights can help you identify promising startups even before they gain widespread attention. So in summary, watching for early signs of growth and innovation while avoiding red flags will help you make smarter bets on startups likely to succeed. All right, time for a recap, just in case you missed something halfway. First, by understanding Y Combinator trends and evaluating YC startups critically, you can better align your portfolio with the startups that have high growth potential. Once again, YC trends aren't just about what's popular now. They're very often early signals of where the industry is heading. Make sure you pick a trend that you want to stick with and then evaluate the startup, check out the team, the product, the growth potential, the solution they offer, and traction. Finally, if you want to spot the next big startup before anyone else, attend the demo days if you can, follow up with any industry disruptors, and don't forget to watch out for red flags. And of course, if you're serious about identifying the next big startup, hit that subscribe button for more insights on startup trends. And don't miss my next video where I'll be breaking down key metrics for analyzing early stage startups. Thanks for watching and good luck on your investing journey.